Tell us what's an investing sort of myth or mistake that people that's commonplace that you find not to be true?
That's a good question. I suppose the cliche answer is that you need a lot of money to start. One of the most powerful things in the long term is compounding returns. The S&P 500, I think it's a very often quoted stat, has never been down over a 20-year period, and that's not necessarily going to continue forever, but I think it's a bet I'm willing to make. If you're consistently contributing to a portfolio, no matter how small, over 20, 30, 40 years, that will become a very considerable amount of money. And I suppose platforms like Stake nowadays, a lot of the other investing platforms that you start, Stake in particular, from $50 with commission-free trades, you can put that money in and continue adding to it. Every month, $50 from your paycheck, $200 from your paycheck. As your salary grows, $1,000 in the longer term, and that will become a considerable amount of money over a period of time. Perhaps a more nuanced or more unique answer in something, or a misconception people have, is that a lot of price cycles and a lot of asset runs are deemed once in a lifetime. So we look at Bitcoin's run from the bottom last year to the top this year, or we look at Afterpay, we look at Zip, we look at A2 Milk. I suppose that's the classic example from 4 or 5 years ago. They say to them, I'm never going to get this opportunity again. But reality is that every year there is some sort of asset that makes that run. So just because you missed out this time doesn't mean you're never going to get the chance again. And just being patient and knowing that, I will have a chance to have access to an asset that runs 2, 3, 4x over the course of the year, and just being patient and waiting for that.
Yeah, I think it's funny that it's the people kick themselves with this FOMO, and there's so much psychology that impacts how we invest and how we manage our money that we get the FOMO, you're kicking yourself, I should have done that, I won't do it now, it's already run, it's run too far. And then you end up doing nothing for a bit, and then the next thing happens, and then you're like, it's the same thing, you're watching it and going, crap, is this the same? And and not it isn't always the case. And then people are, then we've got the herd mentality thing, and it's it all sort of ties in together. But I think that, to follow on from what you're saying, that a lot of people that we talk to, they get caught up on finding the perfect time to invest, but the perfect time is always 10 years ago. The second best time is sort of now. And I think that I'm not saying to blindly invest without being aware of what's going on in the broader markets, but I think it's hard to be perfect with your timing. And if you've got the right timeline, then you take a long-term view, then if you're choosing good assets and good investments, then you're gonna be able to let good investments do what they do over the right time frame, which is make you money. But yeah, it's not always easy to push past that psychology. Alex, what do you think? Sorry, you go.
Sorry, as I say, time in the market over timing the market. I don't think anyone regrets buying Amazon for $50 instead of $25 today.
Yes, exactly. And it is hard to escape that that psychology, because it's pretty well set against us.